I think there's no question that the growth outlook is improving, albeit somewhat moderately as we go throughout the year. And it's a combination of things, as you mentioned. It's China's stimulus probably being a little bit heavier than we had thought previously. Back in 2015 and 16, you got a heavy dose. We've been characterizing it as roughly half to two-thirds of what we saw back then, but that number is creeping up a little bit. It's the Fed and its spillovers to the rest of the world, but it's also some of the growth puzzles of 2018 partially resolving, and Europe is a good example of that. So when you add that all up, you have growth globally that is slightly below trend, but it's probably moving through trend as we go throughout the year. Now, is that a reason to be super optimistic in terms of corporate fundamentals? I think there are limitations to that argument. When you add it all up, we're still teetering around trend. Earnings, and you can see this in Q1 earnings announcements, they're beating expectations that had come down significantly, but they're not jumping off the page. And then even if fundamentals are telling you this is a good time to add risk, our valuation's really offering attractive entry points. And so where that leaves us, balancing all those factors, is adding to risk, but in very measured doses.
All right. So